Yeah, so if I look at the structure of the market, it started diverging from the previous patterns of 2017 and Bitcoin 2013, which was interesting because they were kind of completely mirroring it, and then it started changing. It's something that I've been suspecting was going to happen because the participants in the space have changed, and everybody in it from the past, when it was purely retail, haven't got their heads around this. So what happens at the end of the year is, firstly, there's the tax stuff that we know, and that's probably usually been the tipping point for crypto after it's had the huge run at the end of the year. But significantly, institutions tend to rebalance portfolios. So they will rebalance to go back to their weighting. Let's say their weighting was 1% or 2%. They will sell down on their position. So that tends to drag into year end. Hedge funds, because they want to get paid, want to close their books, because then that's where their P&L is marked and then they get paid on their performance fees. So there's a lot of incentivization to actually take profits. Now, that's not profits of people who want to be out of the crypto market. It's just driven by investor metrics. So when you come into January, I used to see this in the hedge fund industry. I write about it every year in Global Macro Investor. There's a phenomenon that happens every January, is everybody comes in with a brand new P&L. And they're like, well, what can I do today? Now, we've got a ton of crypto hedge funds, traditional hedge funds in crypto. So those guys are going to come to their desk. They've squared their book. What are they going to do? They're going to buy crypto. So, and the institutions, I mean, I know this because I've had first-hand conversations with so many, is, they spent the whole year getting the approvals, getting the custody, getting their accounts onboarded with whoever it is. And then the next step is, well, our mandates for 2022. So I see a huge amount of mandate from institutions actively putting money into the market. So my guess is there's a lot of people who think that maybe the cycle's topped, maybe it's done. I think it's a temporary phenomenon. It probably absolutely rips, and it may rip from kind of next week when most of the institutional guys have gone home. And we see that often in financial markets, because then what happens is it's very thin liquidity and there's a bit of a panic to get into the positions, and that usually goes through. So I think next year is probably stronger in the first half of the year than anybody imagines, because everyone thinks it should have finished now at the end of the year, because that's previous cycles. And I think that, and I've talked about this before, I think the ETH 2.0 is going to be the big driver of the market this time. And I'm sure it's going to be buy the rumor, sell the fact. Now, I know that people who are locked or staked for ETH2, there's a period of time where they can't sell. But that's like red rag to a bull to every hedge fund or every trader, because I know you're going to have to sell. So I'm just going to force you to sell at the lowest possible price, because there's a lot of sellers. So I have a feeling that it's going to be a buy the rumor, sell the facts. At the moment it's announced, everyone's like, oh, ETH's amazing now. It's going to be a deflationary asset and blah, blah, blah. And the market's going to puke because everyone realizes there's a bunch of people who are locked into the position and can't do anything about it. So that's my mental framework. Could be completely wrong. I think it's stronger first half of the year than anybody imagines. And the structure of these markets change. And then I think it probably suffers a bit. And that would also suffer with probably withdrawal of liquidity from the Fed and others as well. So then you get the double negative, withdrawal of liquidity from markets and this change of structure because of the ETH2, which I think will be a larger driver of the cycle than the Bitcoin halving was.